Okay, hello everyone. So we are done with leverage ratio. So this is the continuation under financial ratios. So profitability ratio na ta for today. So profitability ratios are okay. These ratios measure the operating efficiency of the firm and its ability to ensure adequate returns to its shareholders. So the profitability of a firm can be measured by its profitability ratios. So further, their profitability ratios can be determined in whether it is focused on return to sales or return to investment. So again, this focuses more on the operating efficiency. How efficient are you in your operation? And how is your ability? Again, ability nimo to pay back the investor or the shareholders, their capital, their investment. This ratio focuses more on sales, investment, and etc. It is where mabalaan ninyo nga, okay, this is a good investment. Kay dali ra mabalik ang ato ang gasto ato ang gi-invest sa ilaha. So most investors, most banks, let's say financial institution, they look at profitability ratios, your ROI, your ROE, as to how feasible, how efficient is your operation to pay to pay them back their capital, their investment. So that is why we need to know what profitability ratio is. So the profitability of the firm can be measured by different ratio, whether we focus on sales or investment. So we have in relations to sales and in relations to investment. Actually, daghan type ang profitability ratio. Again, which it depends on you which should you focus. But most of the time, gina-use man gud ni sila mostly kaning nasa sales and sa investment. This is where again most investors look at. So when they tend to invest on a business, ilang i-check imuhang profitability ratio kung unsa ka kahalinon, unsa ka tiyadang imong operation, especially for the past 3 years. So I want you to nalang po ko i-share. I want you to know Dragon's Den. So Dragon's Den is a TV show. Actually, this is a TV show in which business business women try to propose and get an investment from what they call dragons. These dragons are legit nga mga investors. So they are one of the most important famous people when it comes to business. Kay dagko kasi lag net worth. So Dragons din ang name aning nga TV show. This is under UK. Sa Facebook ko actually gatan-aw and it's very good knowing pitches, different business pitch from different people who they want the dragons to invest in their business. So the dragons focus on their ROI. So for business people, then ilang i-ask it always kay pila ROI for the past 3 years. Mo gina lang number one thing to look at. So that's why it's very important for you to know what these ratios are and how to calculate this ratio. So you'll know puhon if you want investors mo nang imuhang ipakita sa ila. So we have first in relations to sale, we have GPM or gross profit margin. Next is the net profit margin. Lastly is the expenses ratio. So these focus more on sales. While for our investment, we have return on assets, ROA, return on capital employed or ROCE. Okay, we also have ROI here. I forgot to put ROI. Return on shareholders equity, ROE, earnings per share, EPS, dividends per share, DPS, dividend payout ratio, DP, price earning ratio or PE. So these one focus more on investment, especially for your investors, especially if corporation ka. So again, there are two general types of profitability ratio. It focus more on sales or investment. So we need to discuss the in relations to sales first. We have gross profit margin. So this ratio is calculated by gross profit by sales. So it is expressed as a percentage. So gross profit margin. Focus more on focus more on dividing gross profit by sales. So it is expressed as percentage. So the result of relationship between prices, sales volume, and cost, and so on and so forth. So this is how you calculate the gross profit margin. So gross profit over net sales multiplied by 100. So as it is expressed as percentage, that's why we need to multiply it by 100. So again, gross profit over the net sales. So that is the gross profit margin. More on the relationship again between your profit and your sales. So lahi ang profit ug lahi pud ang net sales. Sales are your revenue, okay? Revenue over sa total ay sa gross nimo nga halin. So next is gross profit margin. So our firm should have a reasonable gross profit margin to ensure coverage of its operating expenses and ensure adequate return to the owners of the business, such as the shareholders. So the focus for gross profit is where it ensures that you have good operating expenses. It ensures in which your operating working capital management is sufficient enough for your operations, dili ka ma-zero, dili ka ma-loss, and continual ang pag-produce or pag-operate sa imong business. So gross profit margin, and also especially for you to pay back your shareholders, your investors. So to judge whether the ratio is satisfactory or not, it should be compared with the firm's past ratios or with the ratio of similar firms in the same industry or with the same industry average. So as you all know, we have ratio. So the purpose is ratio is to compare, okay? To compare so that you will know that you are progressing or not. So you may compare it with imuhang past nga data, past nga ratio. Next is probably the same firm. Let's say for example, you are a broiler production. So broiler production, imo siya i-compare sa imuhang classmates, imong friend nga broiler production po. Or you can compare it to the same industry, murag iyang average, murag iyang standard. For example, nakaset na iyang standard daw nga gross profit margin of 50%. So example, mo ng standard. Then you can compare yours. So you will know that you are progressing or not. So that's for gross profit margin. So next up is net profit margin. So this ratio is calculated by dividing net profit by the sales. It is expressed as a percentage too. So kung multiplied by 100, automatically expressed as 100 or as 100 as a percentage. So net profit margin itself. So net profit after interest and tax or net profit. I think inyo hatalag sang gina-use is net revenue or net income. So it's still the same, okay? So net income or net profit after interest and sales over the net sales multiplied by 100. That's how you calculate your net profit margin. So it depends always on the values on your statements, balance sheet, in your any financial statement that you have. So next is net profit margin again. So this ratio is indicative of the firm's ability to leave a margin of reasonable compensation to the owners for providing capital after meeting the cost of production, operating charges, and the cost of borrowed funds. So net profit margin is where at least you'll know nga naapakay profit nga makuha. Okay, so this again net profit margin focus more on you as the owner and you as the owner of the firm, so you'll know nga napay mabilin sa imuhang profit. At least napay enough money, sufficient money for you to pay your cost of production, your operations, your borrowed funds, and so on and so forth. More on how reliable are you, how efficient are you again on paying your mostly debts, your accountabilities. your operating nga mga expenses. So that's for net profit margin. For you to know at least kana bitang kabalo ka nga nanakay giset daan nga margin as to your net profit and net sales have already kanang ma-cover up niya tanan nimong expense. So that is the focus of net profit. So it is also expressed as a percentage given nga multiplied siya by 100. So net profit, so this is actually net profit or net income nga gilas na imong interest ug imong taxes. So it can focus more on paying your other nga expense, your cost of production, your again operational nga mga charges and funds nga borrowed. So that's it for net profit margin. So another variant of net profit margin is operating profit margin, which is calculated as operating profit margin is equals to net profit before interest and tax over net sales. Okay, so this is another variant. So this focus more on operating. Katong ganina kay more on general terms sa net profit or net income. Okay, net income margin. So as you can see here, we have operating profit margin. So it is before interest and tax. So for the whole operation itself, divided by net sales multiplied by 100. Okay, percentage magyapon niyang expression. So the higher the ratio, the greater is the capacity of the firm to withstand adverse economic conditions and vice versa. So kung mas dako daw ang ratio, the higher it is, let's say 50% up, that means makaya kaniya ang kuan, mo withstand of any economic conditions. Kay with its operating profit palang daan, it can sustain its operation for at least pila ka years siguro or months and so on and so forth. So regardless of the economic condition, probably mo na inflation, so na napoy ay mo balik na pud to normal or economic crisis na hitabo. For example, especially if magka-COVID. So I think kabantay mo for those establishment or firms nga wala nag-close, they have very good net profit margins because as you can see, they are still in operation. They can still withstand the pandemic na situation. So that was good as 2 years na, or mag 3 years na good rather. So can you imagine? So that's for the net profit margin. Okay. So next is we have expenses ratio. Manaman ta sa net ay gross profit ug net profit. So from there itself, gross profit kani wala pa gyud gi-minus tong mga expense, interest, mga taxes. While for net itself gi-minus na pod siya. Mostly less na nitong tax interest. Next is we have expenses ratio. So the expenses ratio should be compared, okay? Compared over a period of time with the industry average as well as with the ratios of firms of similar type. So for expenses ratio daw, mas nice yun siya if imo siyang i-compare. Makita nimo kung unsa ka kagasto based on other firms' performance or other nga firm nga ga-operate gyapon. So you'll know nga dako ra ba kay ko og gasto, na sobraan ba ko gasto. So let's try to compare it with the industry, let's say average or with the same lang gyapon nimo nga business. So a low expenses ratio is favorable. The implication of a high ratio okay, again, a low expenses ratio is favorable. So the lesser the ratio, mas nice siya, mas favorable siya sa imo kay because we are talking about expenses. So if possible, it should be at a minimum. So the implication of a high ratio is that only a small percentage share of sales is available for meeting financial liabilities like interest, tax, dividend, and etc. So the implication of a high ratio, again, it means nga with a high ratio, it means that only a small percentage has share daw available to meet the financial liabilities. That means nga gamay na lang dayon. Let's say for example, dako ang imong financial ratio, high ang imong rate. Kay dako man imong expenses, that means nga gamay na lang ang imuhang means to pay your liabilities such as interest and tax or dividend. Kay ni-focus man ka sa imong operational expenses. How about those katong fixed nga expense such as kaning interest and tax and dividend. So how about that one? So murag dili na nimo siya ma-meet, di nimo maapod tanan to pay your expenses because you are focusing more on your operational, which is much needed compared to your interest and taxes. But in the long run, it would greatly affect you kay probably mabulto sila, so masakit siya sa inyong part. So these ratios are calculated by dividing the various expenses by sales. So the variance of expenses ratio are this one. So at least we have two. We have material consumed ratio. So material consumed over the net sales multiplied by 100 because again, it is also expressed as a percentage. While manufacturing expenses ratio is manufacturing expenses over net sales multiplied by 100. As you can see, na siya'y variance, at least duha. Duha or many actually. It is because we have different nature of business. We have different types of expenses. From, let's say, for production, we focus more on materials. Okay. Example, materials to nag-focus or manufacturing a production ta, we process. With that, we have manufacturing expenses. We also have administration expense. So for expense ratio, if possible, each category of your expenses shall be calculated, okay, based on your net sales. So you'll know which part or which area of your expenses is greatly affecting your company. Asa dapit ani sa ila ang pinakadakong expense. May it be in the material, the manufacturing, in the administration, in the selling, in the operation, or the financial expenses. So we have actually many types of expenses ratio. For administration expense, you just need to divide it with net sales multiplied by 100. For selling expenses or those for marketing expense. Selling expenses over the net sales multiplied by 100. For operations, we have cost of goods sold plus operating expense. So COGS or COGS plus operating expenses divide net sales multiplied by 100. While for financial expenses ratio, we have financial expenses divide net sales. So financial expenses mostly are composed of interest, kay financial expense man siya for loans, example, loans, and loans. Mostly inganap sa financial expense and also depreciation. So multiplied by 100. So that's it for the in relations to sales. So we just use net sales as the numerator, denominator and numerator. So correct me if I'm wrong. When it comes to getting the ratios or the data for our sales, may it be from gross profit, net profit, or your expenses in relations to sales. So how about in relations to investment? So I guess familiar mo ani sa investment. So we have return on assets first. So return on assets or ROA. So this ratio measures the profitability of the total funds of a firm. Again, profitability of the total funds of the firm, total funds or assets. So it measures the relationship between net profits and total assets. So net profit plus total assets, such as imong building, imuhang mga machinery, and so on and so forth. So the objective is to find out how efficient the total assets have been used by the management. So how efficient are you in using your assets sa imuhang business? Let's say, for example, imong asset is your building or your mga cars and so on and so forth. So how efficient are you to use those assets? And also capital nimo or mga stocks. So total assets also exclude, okay, they exclude 52's assets, as the total assets at the beginning of the year and the end of the year may not be the same. Average total assets may be used as the denominator. So as you can see, total asset is the denominator. So this excludes 52's assets. So example for 52's assets are katong dili siya tinuod, such as trademark, kanang anything na dili nimo siya magunitan, dili siya tangible ng mga assets, okay? Such as trademark, mga patents, and so on and so forth. So excluded na siya here. So we have this formula, return on assets equals to the net profit after taxes plus interest. So after tax plus ang interest over the total assets that you have multiplied by 100. So percentage gyapon ang yang pagka-express. So that is return on assets. Focus more on how efficient are you to use your assets in the company. So based on your profit or income. How about return on investment? I guess you are very familiar with this one, ROI. So it is the ratio of a profit or loss made in a fiscal year expressed in terms of an investment and shown as a percentage of increase or decrease in the value of the investment during the year in question. So focus more on the profit itself, return on your investment. Mostly your investment includes, okay, your investment includes your own capital, imong money, ang imuhang mga cars, any investment that you'd like to know. But for the company, total investment yun ato ang gina-use. So all of the investment you had garnered or used. So is again, focus more on profit or loss on the fiscal year or on the given year. So you'll know whether there is an increase or decrease of value sa imong invest. So we have ROI here, return on investment is equals to net profit over total investment multiplied by 100. So we have differences, okay? Not a difference between return on assets and return on investment, ROI and ROE. So the difference between them is that total asset is composed of, gi-include niya tong mostly monetary gains as well as your assets focus more on the things you purchase on all of your assets. So return on your assets. So mostly focus on same nagyapon kay capital, any assets that you bought, probably your buildings, your equipments, machineries. While for return on investment, investment includes monetary value such as imuhag yung capital nga gi-invest, okay? Especially for your investors or shareholders as to how much ka-percent ang ilang gi-invest. Let's say for 5 million, pila ang mabalik sa ilang 5 million if mag-invest sila anang amount. Probably you at least 50, 30%, so depends. Okay, it always depends. So in order to get your ROI, again for investors, dili gid sila magtan-aw sa imong ROI kay hala kung mag-invest ko pila lugar mabalik sa ako after 1 year, after 2 years. Pila sa lugar mabalik ako ang whole nga gi-invest when ko makabawi. So mura na siya example. So return on investment. Next is we have return on capital employed. So ROCE. Okay, we have return on capital employed or ROCE. So this ratio measures the relationship between net profit and capital employed. So focus on net profit and capital. So it indicates how efficiently the long-term funds of owners and creditors are being used. So capital employed denotes shareholders' funds and long-term borrowings. To have a fair representation of the capital employed, average capital employed may be used as the denominator. So same rin siya actually with ROI. So more on based on investment ng yapon. So for capital employed, this focus more on the shareholders fund lang yapon. So let's say for example, we have a company and we have a company and each of your investors has employed a capital. You are using their money for the working capital. Diha nag-focus. So ROCE, actually murag mo ni ang pinaka-latest term for ROI in the latest nga kuan nga accounting nga book. So okay ra sila mag-interchange kay same na gyud sila actually. But this is the updated version kay actually murag dili na kayo siya called as ROI kay gina-interchange siya sa ROA or return on assets. So that's why murag mostly kanina ang gina-use return on capital employed or ROCE. So don't worry if maglibog mo sa duha if unsa lang difference. Again, assets focus more on the physical, anything that we had purchased on the assets that you bought for the company. While ROI is more or less likely the money that your investors had put in your company or your capital also itself. So same lang yun sila sa ROCE. So return on capital employed, you'll have net profit after taxes plus interest over capital employed. So as you can see here on ROI, net profit lang siya over total investment. The difference is that gi-adan ra siya og interest ang ROCE. Okay. Ang ROCE. So again, focus more on shareholders fund and long-term borrowings, especially sa imuhang gi-borrow. Dili lang siya focus actually on shareholders funds. It also goes the same with your loans. Okay, for your working capital, for example, you had loan for your working capital in order to continue your operation. So you borrowed them. So in order to return what is borrowed, you need to calculate your ROCE or return on capital employed. So after taxes, so gilas na ang tax plus the interest nga imong kakagain over capital employed times 100. ROI mostly is dito po siya mag-focus sa dividends, okay? So especially if company mo na kay many types of investors, so napud as like dividend share aside from their ROI. So next is we have ROE. So return on shareholders equity. So I guess familiar pod mo ani kaayo, ginagamit ni sa inyong thesis. So this ratio measures the relationship of profits to owners fund. So shareholders fall into two groups, preference shareholders and equity shareholders. So the variance of return on shareholders equity are net profit after taxes over total shareholders equity multiplied by 100. So if wala kay tax, for example, dili ato siya ginalas, just focus on net profit or net income. So shareholders equity, their total nag-invest ng gyapon. So more on their investment also and as to how much pila ilang kakagain based on the shareholders equity that they had put. Let's say for example, you are in a corporation. So sa corporation mo daghan ka og investors na sila yung mga shareholders equity. So giipon na nimo tanan, let's say 1 million each sa 5 ka investors. So for their 1 million each, okay, you'll need to know pila ang ilahang share based on your net profit and based on the shareholders equity that they had given sa imong company. So for example, 1 million man sila each. So imong profit is 15 million over 1 million multiplied by 100. So probably at least 15% ang mabalik sa ilahang shareholders equity. Sa ilahang gi-invest gyapon sa imuha. So may it be equity in terms of ROE in terms of how good your company is to pay back your mga investors. How efficient are you to pay back again your investors, your kato yung invest nga money, especially based on the profit that you had gained. More siya based also on dividend income. So under gyapon ni siya sa investment. So return on, again, investment, ROCE, capital employed, and shareholders' equity. These are, again, funds from your shareholders, from the people who bought your stocks or shares sa company. So with that, they need to know pila ang ilahang kaka-gain based on sa ilang gihatag na gi-invest. For 1 million, pila kailang makuha. Okay, based on your net profit nga gilas na ang tax. So with this data, they'll know nga, okay, efficient kini siya mohatag. That means nga mabawi yun na to ang gi-invest. Given nga tsada sila og performance, tsada pod ilang ROE. So we have total shareholders equity. So this includes preference share capital plus the equity share capital plus reserves and surplus less the accumulated losses due to its assets. To have a fair representation of the total shareholders funds, average total shareholders funds may be used in the denominator. So more on, again, your share capital nga gi-employ plus giadtong mga reserves and surplus katong mga sobra-sobra, gilas tong mga losses nga imong na-gain ug katong assets. Pigtutuo sa assets katong dili siya liquidate ng mga assets kay kuan lagi. Example ha, mga patent, okay, trademark, dili man na siya ma-liquidate. So that's for the total shareholders equity itself. So as to how much value or money they had, okay, so these includes, again, the total shareholders equity. So we also have ordinary share equity. So return on ordinary share equity. So net profit after taxes less the preferred dividend over the ordinary share equity or net worth multiplied by 100. So this includes equity share capital plus reserves and surplus minus the fictitious assets. So return on ordinary shareholders equity focus more on the net worth of the investors. So giles na ang preferred dividend here. Gi-minus na to siya. Gi-appeal ang taxes. So giles na ang taxes and dividend over the net worth sa shareholder mismo, especially if they plan to kanang depende man sa ilang arrangement always, but especially if they plan to withdraw their their shareholders equity from the business. So multiplied gapon siya by 100. So the next one is we have earnings per share or EPS. So this ratio measures the profit available to the equity shareholders on a per share basis. So this ratio is calculated by dividing net profit available to equity shareholders by the numbers of equity shares. So measures the profit available sa equity shareholder based on per share nga basis. So we calculate it using the numbers of equity share. So earnings per share is equals to net profit after tax less the preference dividend over the number of equity shares multiplied by 100. So focus more on the our equity share. So based on their shares, number of shares that they have. Let's say for example, daghan sila og share sa business, pila ka share for the whole, let's say pie, mga duha or tulo. So you'll duha or tulo or probably million. So number of equity shares that they have. So you just need to divide your net profit yapon jelas ang tax and dividend in order for you to have your earnings per share. Okay, earnings per share. So again, this focuses more on equity per share. So based on the number of equity share, let's say for example, 10 sila kabuok or okay, sorry na hindi ko na mute. Hopefully wala. So let's continue. So earnings per share is the number Earnings per share is based on number of equity shares based on the profit. So, gilas ng tax and preference dividend here. So, this is where mabalaan sa shareholders as to pila ang ilahang ma-earn. Pila ang ilahang makuha, okay, sa company. So, gilas na ni ang dividend nila nga makuha at also the taxes. So, that's earnings per share. Next is we have dividends per share too. So this ratio shows the dividend paid to the shareholder on a per share basis. So pila daw ka dividend ang ihatag sa ilaha based sa ilahang share, okay, sa company. So this is a better indicator than the EPS as it shows the amount of dividend received by the ordinary shareholders, while EPS merely shows the theoretically how much belongs to the ordinary shares. So, mas detailed ang dividend per share kay mao magud ang main nila nga focus pila ang ilang makuha nga dividend as shareholders. So, dividend paid to ordinary shareholders, okay, divided by number of equity shares. So, pila ang dividend nga na accumulate for the year, then mo siya i-divide sa number of equity share there is multiplied by 100 to get the percentage. So probably mo yun kang hala tag 5% ang inyong dividend or tag 12% inyong dividend and so on and so forth. So this also focus more on sa investment. So how profitable is your business when it comes to giving earnings and dividends sa imong shareholders. We also have what we call dividend payout ratio. Okay, dividend payout ratio. So this ratio means the relationship between the earnings belonging to the ordinary shareholders and the dividend paid to them. Again, this ratio measures the relationship between the earnings belonging to the ordinary shareholders and the dividend paid to them. So payout. So from the word itself, dividend payout. Pilang ilahang makuha diretso nga earnings and dividend. So total dividend paid to shareholders over the net profit after tax plus the preference dividend. So mar siya gibali. So pila ang ilang diretso nga makuha. Okay. Pila lang diretso nga makuha based on the dividend and earnings. So, pila ilang share pod. So, total dividend paid to the shareholders, i-divide sa net profit after tax less the preference dividend multiplied by 100. So, this is its formula. And also, we have another type of formula. Same lang gyapon. So, depende. Actually, ni siya sa unsa ang given. So, dividend per share over earnings per share. So, pila daw ilahang dividend? Pila lang dividend per share and earnings per share. Mara siya og DPS, okay, dividends per share over EPS. So, that's how much your dividend payout ratio is. Pila ang imuhang ma-payout directly. So, multiplied by 100, so that's on percentage na dayon. Ay, ka mga yate sa Okay, so that's dividend payout ratio. So again, they focus more on dividend per share over earnings per share or DPS over EPS multiplied by 100. So you'll know how much you can you can pay out anytime from the profit of the business. So next is we have price earning ratio, so PE. This ratio is computed by dividing the market price of the shares by the earnings per share. Again, market price of the share by the earnings per share. So it measures the expectation of the investors and market appraisal of the performance of the firm. So price earning ratio is equals to market price per share over earnings per share. So you need to multiply it by 100. So that's it. So this focus on based on the price, okay, based on the market price. So the market price per share of your investment of the shareholders funds over the earning per share of the whole EPS, the earnings per share of the whole organization based on the market price and based on the earnings that is gained by the organization. So that's price earning ratio. So based on the prices daw, pila daw ang gain. So you just need to multiply it by 100 so you can get the percentage of this ratio. So that's it for profitability ratios. Medyo daghan siya based on investment and sales. So for sales, just another overview. Let's go back. For sales, we have GPM, gross profit margin, net profit margin, and expenses ratio. While for investment, we have ROA, ROI, ROCE, ROE, EPS, earning per share, dividend per share, dividend payout, and price earning ratio. So these are part of the profitability ratio. So again, this ratio focus more on how capable or efficient our company is when it comes to earnings and paying out our investors. Okay, investors or you yourself, based paying back your investment or capital that you had earned. Okay, so next we have activity ratio. So these ratio are also called efficiency ratios. So asset utilization ratio or most likely turnover ratio. I guess familiar mo ani turnover ratios. So these ratios show the relationship between sales and various assets of a firm. So the various ratio under this group are we have inventory or stock turnover ratio, debtors turnover ratio, and average collection period, asset turnover ratio, and creditors turnover ratio, and average credit period. So before that, I'll try to show you examples of my, later na ako magpakita after we are done with the ratios. So I'll show you my thesis. Okay, my thesis based on the ratio because as per our result and discussion, we need to discuss how efficient are we in our thesis. And to know that one, we need to do or calculate our ratios. So later, ako ipakita ako ang thesis so you can see how we used it. So let's go back. So activity ratio more on efficiency ratio. How good are we in utilizing our inventory, our stocks, our assets, ato ang sales. So these is mostly focused on assets and sales. So let's continue. We have inventory or stock turnover ratio. So inventory turnover ratio. So these indicates the number of times inventory is replaced during the year. Again, how many times do you replace your inventory? Pila mo ikapila mo mag-replace or mag-replenish. So it measures the relationship between cost of goods sold and the inventory level. There are two approaches for calculating this ratio. So nadutay duha ka approach, we need to know the relationship between sa imong cost of goods sold and the stocks that is available sa imong inventory. So the first one, we have inventory turnover ratio that would be calculated as COGS or cost of goods sold over the average stock multiplied by 100. So that's how you'll get the inventory turnover ratio. Well, the second one, we have average stock. So this can be calculated as average stock is equals to opening stock plus closing stock divided by 2. And it can also be called as inventory turnover ratio is equals to sales over closing inventory. So you may use either one of these three calculations: inventory turnover ratio, cost of goods sold over average stocks, in which you can calculate the average stock by this formula. So imo rang i-add ang opening o closing stocks, then i-divide it by 2. then you can get the inventory turnover ratio in which we have sales over closing inventory. So you can use this one or this one. So nara sa duha. So a firm should have neither too high nor too low inventory turnover ratio, because too high a ratio may indicate very low level of inventory and a danger of being out of stock and incurring high stock out costs. On the contrary, too low a ratio is indicative of excessive inventory entailing excessive carrying cost. Again, kung taas daw kay ang ratio, that means gamay ra daw kayo ang imuhang stock. Basin ma-out of stock ka or what you call that one, mura kag makulangan. Okay, makulangan ang imuhang supplies. So with that, sayang, daghan kay kag opportunity cost. You'll have high stock out cost. Okay, kay sayang man, especially opportunity cost, nga mahalinan unta ka but wala may available because out of stock mostly ang imuhang inventory. But on the contrary daw, if it is too low, that means sobra ra pod kay mong inventory. Murag dako na noon kay kaog carrying cost or inventory cost, which is focused on maintenance, storage-based maintenance. So that's another problem too if sobra ra pod kayo. So if possible, your inventory turnover ratio should be at least kanang balance. Balance lang siya. Dili lang pud ka siya too low, di pud ka siya too high. So that's it for inventory stock ratio. Again, this focus more on your inventory, ang imuhang available na stocks nga products sa imuhang company. Next, we had debtors turnover ratio and average collection period. So this ratio is a test of the liquidity of the debtors of a firm. It shows the relationship between credit sales and debtors. So debtors turnover ratio is equals to credit sales over average debtors and bills received. This focus more on the liquidity daw sa mga nangutang sa imuha. So debtors okay, so that means nga how liquid are your katong mga nangutang sa imuhang company, especially based on credit sales and debtors, based ilang giutang og sa ila mismo katong mga naay utang sa imuhang company. So how liquid are they when it comes to payment? So based on their credit sales, imong halin on credit or on utang over the average debtors and bills received, pilang ilahang ginapay. Is it ang ilaha bang ginapay sa imong receivables ma cater lang imuhang sales, imong utang ilahang credit sales? So that's it. So that's what it means by debtors turnover ratio. How liquid are they when it comes to paying their utang sa imuhang company? Next is average collection period. So this would be based on the average collection period. Pila ka months or days in a year daw ka ginabayaran. Let's say for example, consistent nga every month or consistent na every 15th and 30 or yes, mostly monthly or days month. So how consistent are they when it comes to payment? So collectibles needs to be to be collected in order for you to replenish and use the money for your working capital para mo continue to operate ang imong business. So you need to know how good are they when it comes to paying their utang sa imong company based on turnover ratio and the average collection period. So that's that turnover ratio and average collection period. So these ratio are indicative again of the efficiency of the trade credit management. So how efficient are you to your trade credit management on your debt, accounts receivable and accounts payable? This one focus on receivable. Need nimo i-receive imong collectibles from the credit sales, mostly credit sales money. So a high turnover ratio and shorter collection period indicates prompt payment by the debtors. On the contrary, low turnover ratio and longer collection period indicates delayed payments by the debtors. So the higher ang turnover ratio, that means nga efficient ka. Efficient ka in terms of mag-receive or mag-collect, mag-collect or maningil sa imuhang maningil sa mga nangutang at the same time imo pong ginautang at the same time kato pong nangutang is liable pud kay sila mo bayad. So they are very responsible with their payments. But if low ang turnover ratio, that means nga dugay ka makakollect kay probably naman is like factors. But most of the factors says nga there is delay. Delay ang pagkabayad sa imuhang debtors. So in general, a high debtor turnover ratio and short collection period is preferable. So if possible, high imuhang turnover ratio and also short imong collection period. Kay the shorter the collection period, the more that means nga efficient ka sa imong pag-manage sa imuhang credit. So let's continue. So that's for the debtors turnover ratio. Next is the asset turnover ratio. So depending on the different concepts of assets employed, again, we have different concepts of assets. So there are many variants of this ratio. This ratio measures the efficiency of a firm in managing and utilizing its assets. So how good are you to utilize your assets? So especially based on cost of goods sold or sales. So we have total asset turnover ratio. That would be sales or cost of goods sold over the average total assets, or fixed assets turnover ratio, sales or cost of goods sold over the average fixed assets. So depends sa imo. Would you like to have the total assets have the total assets calculated, or just only focus on fixed assets? So regardless, you can make a choice as to which asset will you use. So what concept of asset will you employ? May it be total or fixed. So just like yan yung formula kay sales over average total or average fixed assets. We also have capital turnover ratio. So sales over the average capital employed. So how much capital imuhang use as an asset, or the working capital turnover ratio over the sales over the net working capital. So as to how much working capital had you added for your company. So imo siyang check. So the higher ratios there is, it means that there is efficient management and utilization of resources, while low ratios are indicative of underutilization of resources and presence of idle capacity. So that means when you try to check your assets based on the asset turnover ratio, is it really utilized? Based on this ratio, na-utilize pa ninyo og ayo? So imong i-check. So kung ako siyang i-base first akong working capital. So my sales or cost of goods sold over my net working capital. If dako ang akong ratio, that means na I am efficient with my capital. Gakagamit yun siya. Wala po siya na kulangan. So if possible, you should utilize all of it. Mas nice man siya, dili man good kay nice kung kuan man negative or kanang bitang ma-short kasi mong capital. Mas nice siya if possible kay mahurot gud nimo, ma-utilize gud nimo siya og ayo kay most of the time when it comes to having capital, ato na siyang gi-budget daan. Once ato na siyang na-budget daan, that means nga okay na gyud siya gastuon tanan. So the problem there is if imong makita sa ratio nga hala gamay palagi ako ang kaka-consume, marag 45% pa sa akong capital day ako na consume. So probably napa ko need himuon in order to consume all of it. Kay probably kung base akong halin, okay, base akong halin og sa akong capital, 45% pa ang na-use. What if ako pa siyang i-use ang 100%? Probably mas mudako pa ako ang sales too. again, it would really affect your sales. So, kuan na sila kanang interrelated. Tanan. So, that is what it meant by the asset turnover ratio. Depende sa imo, unsa imong asset nga gusto i-check. Total asset, fixed asset, the capital nga imong gi-use, or the working capital nga imuhang gi-use. Capital or good as investment ni siya. So that's it for asset turnover ratio. Next, we have creditors turnover ratio and average credit period. Ganina kay debtors man to, katong nangutang sa ato. Creditors means nga kita natay utang. So this ratio shows the speed with which payments are made to the supplier for purchases made from them. It shows the relationship between credit purchases and average creditors. So, bali siya sa debtors turnover ratio. This one is creditors. We are the one nga natay utang. Especially, for example, we have loans, we have purchases. Nagbayta sa ato ang suppliers on credit. Ato sang giutang kay wala pa man tay cash. Wala pa man tay money. Nanamputi arrangement nga magbayad mi if mahalina na mi. So let's say that's for example. So we have creditors turnover ratio. So this means it is credit purchases over the average creditors in bills payment. So pila tan imuhang giutang over sa imuhang payables. Pila ang need nga bayaran. So imong gipangpalit, gipang purchase over sa average creditors and bills nga imuhang need bayaran too. So we have average credit period here. So may it be years or days or months over credit turnover ratio. Let's say for example, inyong credit period is 3 months or 1 year, 12 months over the credit turnover ratio. So pila pa ka percent imuha daw na bayaran sa imuhang mga payables, sa imuhang credits. So that's what it meant by the average credit period. So higher creditors turnover ratio and shorter credit period signifies that the creditors are being paid promptly and it enhances the creditworthiness of the firm. So if possible, high imuhang credit turnover ratio. So you'll know nga, so the debtors, okay, katong gapautang sa imuha. Okay, katong gapautang sa imo, especially banks, will know nga, okay, pwede kani siya nga pautangon again kay maayo man siya mubayad. So that's what it meant by this ratio, especially if short-term ang imuhang credit period. So the earlier you will pay your liabilities, the more it enhances your creditworthiness. The more you are liable for higher credit na bitaw. Pwede ka mas muutang og dako given nga you have a good payment history. So that's what it meant by credit turnover ratio. So that's it for activity ratio. So simple lang sila ka ratio based on the typical activity that we have in our company. May it be inventory turnover ratio as to how efficient are we with our management sa atong sa atong inventory. Next is ato ang collectibles, accounts receivables. How good are we with managing our accounts receivables? Mag-collect at the same time, mag-collect or maningit sa ato ang mga naayutang sa ato. Next is asset turnover as to how good are you at managing your assets? How good are you when it comes to utilizing those assets that you have? Based on these sales. Next is creditors. How good are you with payments? Same hong liabilities. How creditworthy are you when it comes to, again, paying your responsibilities to other companies? Imuhang mga utang itself. So that's it for activity ratio. So in a minute, I'll show you. Okay, if you have any question, thank you for listening. Please feel free to message me anytime. So with this, I'll show you an example. Okay, in a minute. Okay. So this is my example. This is actually on my thesis. So I hope you can see it clearly. So this is my profitability analysis. Just like you, I use ROI, ROE, GPM, and NPM. So these are the typical things that we are going to use in our proposal. So this is where we'll know how efficient are we when it comes to our profitability. So we have ROI here, ROI. So we have net income over total investment. As you can see, I use net income. Pwede man siya net profit. So just a clarification sa inyo haha. When I say net income, you also need to put net income here in your interpretation. Okay? Kung net income imo ibutang diri, dapat net income pod imo i-indicate in the interpretation. So what if I use net profit? So this was actually 2017, 2018. So 2018 siguro na ako ni nga thesis. So net income. So again, thesis na yun niya siya. So again, if dapat consistent mo with your words, okay? If you use net income, you also need to use net income here in your interpretation. So for ROI, so this is good as an example. I have a net income of 2,747 and 50. So this is my actual figures, good. As you can see here. Okay, I have here retained earnings at the beginning, 2,474 because nako retained earnings kay duha man mi ka cycle. So this is my projected balance sheet, my name. Okay, the name of my enterprise. So yeah, projected balance sheet here. So as of October 2017 to December. So October, November, December, at least 3 months. So I have a returned earnings of 2,000. This is actually my net income here. Okay, mo ni siya akong net income on my first cycle, 2,747.50, which is I had added in the second cycle. So that's for the retained earnings in the beginning. So as you can see here, added siya sa second cycle. So gi-add siya, so I had a total owner's equity of 14,180. So that's my cash, capital, and income, net income. So let's continue. So my ROI is 11, this one, 11,432.50. So I hope that's clear sa inyo. So I have it here. So in my first cycle, I have at least an ROI of 24. Okay, 24.03%. So yan ra kag gamay ako ang na gain nga ROI based on my first cycle. So for my interpretation, this is it mo din akong interpretation. So it indicates that I hope it's clear sa inyo. So it indicates that for every 100 pesos capital investment, the project generated a net income of 24.03 Philippine peso. Kay 100 pesos man ako siya. So I converted this into cash. So good as 24.03 pesos. Okay. In the first cycle and 29 in the second cycle for a period of 35 days per cycle. So that's my interpretation. So as you can see here, this is my ROI. So I had compared my first and second cycle here. But if first cycle lang mo, you can say nga, based on my ROI, so based on my ROI, or you'll also start with it indicates. So that means that in every 100 pesos, okay, of capital investment I have or added in my business, it generates an income of at least 24.03 pesos. So this is on peso base. So this is my ROI in every 100 peso down. So net income rather. Okay, because I focus on net income. Again, kung net profit mo use net profit here. But if net income, try net income. Well, for ROE, as you can see here, we have ROE, net income of the same over my equity. So same lang siya actually sa ako ang ROI, ang first cycle. So same lang sila because wala man ko lain nga equity. My investment is the same as my equity. So it indicates daw that for every 100 pesos for owner's equity, the project generated a net income of 24.03 Philippine peso in the first cycle and 22,000 in the second cycle. As you can see here, that is 22,000. So my ROE on my second cycle is medyo lahi siya. So why do you think so? Dili siya parehas sa akong first cycle. So let's take a look nga nung ni-increase akong ROE on the second cycle. So let's look at my balance sheet. So that is because I have added a net income. So ni dako na pud siya. Naada na pud og another halin ang ako ang second cycle. As you can see here. So yan na ka-simple ako ang balance sheet actually. Actually, ayaw ko realize na ni-graduate na ko. Dili ka siya tsada ako ang pag-present. And dili siya, wa siya ka-follow sa format. Ay, ka-follow di ay double line. So, as you should do, you should follow this format. Dapat double line, single line, and double line. So, double line, single line, and double line. So, this is my, again, balance sheet statement. So, I have a net income of 3,000. As you can see, mas nidako siya compared sa akong halin sa last or sa first cycle. So that's where I have this figure, 3,210. Okay. Okay. Lahi na po di akong use sa second cycle. Sorry, I thought it was the same. So, nilahi na siya sa second cycle for my ROI and my ROE. So, as you can see here, that is it, 3,000. So, gi-add siya actually sa total equity tong retained earnings, which is 2,747. That's it for my ROE. Well, for the gross profit, so I have 5,040.50 over 16,880. So gross profit margin. So let's look at my, okay, in a minute. Okay, my gross profit, okay, as you can see, my gross profit is based on my income statement. So I guess I'll try to show you my income statement. So this is my PDF or final nga file code. So okay, that's not it. Is it here? Okay, income statement. As you can see here, this is my income statement. So for the first cycle, I have a gross profit of 5,040 and 50 centavos. So this is my gross profit. In a minute, I'll show you my Excel. Actually, since 2016, I have been using Excel na good sa akong pag-balance. In a minute, I'll show you. Okay, so I hope you can see my screen clearly. So this is my books of account. Okay, pila na ni ka years. I think 4 years, 3 years na ko since I graduated. So actually, since naggamit na yun kong Excel, and no, I won't share my Excel. So as you can see here, ingano siya ka-simple, di ba? Nakakita mo nga kung ano siya, na siya table daan. Ako na siyang gihimo. I'm very sorry everyone, but I won't, di ko mag-share sa ako ang mga formats. Kay, na ako'y nadunggan, kay once you share your files, kapihon na din siya diretso tanan, and that's not good. I don't want you to do that. I just want you to at least try to explore for yourself and on how to use Excel, and for me, mas dali yun siya, mas gaan. So as you can see here, daghan kay kong gipang butang. I have plan, actual, difference, and yes, for the first cycle, okay, I'll try to color it. So for the first cycle, I have this one, and for the second, this is the file for my second. So as you can see here, di ba ang na-project ra o nakita nimo is kanilang mora ni nasa akong libro, but in actual ingani siya kadaghan. Daghan ka siya column nga ako ang gibutang. Akong gibutang ang actual gyud nako nga gasto, ang actual nako nga profit, then pila yung difference. Once it says negative, that means nga I'm losing. Okay? So, it's either I'm losing or mas kuan. That means nga mas dako di ay rather. Mas dako akong plan compared sa akong actual. And that's good. At least nakasave ko at least 60. Okay, 60% daw sa ako ang actual and plan. As you can see, akong plan is 16,500 na sales. In actual, kay kuan na day siya. 1,059. So that means wala na ko siya na kuha. That means na siya loss or negative. So ako dang chicken down is 380 ang gi-expect nga income. Only 150 had come up. So that's another example. That's why dagko ka siya og negative. So this is for my kuan naman ni siya. For my analysis lang sa ako ang thesis. So let's continue. For as you can see here, my gross profit is 55,040. So this is actually based on sales less the total production cost. So based on the total production cost, that's why we had gross profit. So let's continue to our gross profit margin. So in a minute. I hope it's clear sa inyo, ha? So it indicates that for every 100 peso of sales, okay, 100 peso of sales, the project generated a gross profit of 29.86 pesos. So wala ko nag-use atong for every 1 peso. I use for every 100 peso. So PHP in the first cycle and 32.60% in the second cycle. So that's it. Same lang sila. I just really based it on the gross profit there is on my thesis. So that's it. Ayaw kay magkabala ka if tingala mong halala lagi ang actual ni ma'am, wala lagi niya gi-declare. So it depends on you mang gyud siya. But ako lang siya gi-write good down. Plan versus actual gyud na siya always ang kakahitabo. So for your thesis too, mostly you just need to indicate your plans. So okay, so that's it for the gross profit. So GPM of 5,503.50 over 16,880. So that's how we interpret it too. Well, lastly, we have net income or net profit margin. So we have a net income katong ganina sa ato ang balance sheet 2,747.50 over 16,880, which is the total sales. So ato ang net profit margin ra is only 16.28. So medyo gamay siya compared sa ato ang gina-expect. So don't worry, that is okay because this is just a first first cycle. Kung first cycle, ma-expected ka nga gamay yun ang imuhang turnover, ang imuhang halin. Based on your capital. Kay on the first cycle, diha man gyud madak-an ka sa imuhang cost. Kay start up pa man imuhang business. So that's it for our financial ratio. So I really do hope nga you try to you try to interpret your ratio yun. Imong i-check. Okay, nga no 19.02. Okay, based daw sa ako ang net income o total sales, more daw ni ang ako ang magkuha at least 19.02%. So that means nga in every 100 daw pesos nga sale, 100 peso na ko nga halin, ang ako rang mag-gain sa akong halin is 16.28 peso. More daw ng increase or good as ako ang net profit good in every halin. Okay? That in every halin per 100 nga sales. So in the first and second cycle. So that's it for today, everyone. So I want you to really promote Excel para mas sayon sa inyo ha. I have my feasibility study here. So ROE, di ba automatic na siya? So actually, this is already connected sa akong mga worksheet. I have worksheets here. So nagsige kog try to balance. Mun na ka sa Excel kay diretso lang siya. So automatic na pud akong ROI, ROE. I have differences too. You can actually indicate this in your thesis, but I think nara mo gina-follow nga format. Bago pa pud mi nag-meeting actually about ana sa inyong mga formatting. So as simple as that. Again, I won't be sharing this one because I want you to explore on your own para mas makabalo mo. Same naman siya actually. Just need to try to exert some effort. Promise, worth it good guys siya. Dali ra kay ko nakabalance. Especially if nag-struggle with mo sa pag-balance. As simple as you just change one number here. So, mo change ra ka og a simple number here, mo change na din tanan. So, I have cash flow statement, income statement, capital requirement. Kasi akong capital requirement, ako siyang gigamitan og Excel. My tables, okay. All my tables are actually here. So, comparative sales and other incomes, comparative cost of day-old chicks, cost of feeds per cycle. I had also did this one. Plan and actual, nagyo na sila always. My cost of supplies and veterinary supplements, plan, actual, and the difference. I always indicate my difference so that I'll know pila ang mura bitawg increase or decrease. So I'll know nga murag okay, murag medyo dako na ko sa kani nga part. Medyo kani nga part kay wala siya na-achieve. Kani mga negative wala na nga achieve because of many factors. Layo ra gid kay ang plan og actual. As you can see, dagko kay kog negative. That means nga wala ko nagbayan. Okay? So more siya something like that ang hitabo. So my second cycle, so this was on first cycle. My second cycle, my cost of utilities, transportation expenses, labor requirement, and yes, so on and so forth. My thesis, so okay, medyo libog ka siya, sorry. Because I kept on, ga-explore po ko ani nga time. Okay, at least proud ko sa akong self, kaya nakahimo day ko ani sa una pa. Taod-taod na day mi nagka-BFF. Okay, my transactions. I actually put it here, so I'll know nga ma-balance good siya. Kabalo ko nga sakto. Ang ako okay, as you can see here, grabe na ako pag-add. Sakto ako ang gipang butang nga number para di ko malibat po. My proposal, income, cash flow. So since proposal, nag-Excel na din ko. So since my third year. So I hope makuan pod mo influence to try to do Excel too. Again, I won't be sharing this one. I'm sorry, everyone. I just want to avoid plagiarism because medyo pro na siya karon, especially sa inyo. Tungkol sa inyong ka-stress siguro, yun na lang mga hala, kopyahon na lang kuning thesis sa akong friend. Kaya iya mag-share tanan. Ako lang i-edit gamay. Which is obviously halata day kay sa amo ang part. So I guess that's it. Thank you for today, everyone. So I hope you had learned many things. Okay, so just focus more on how to really analyze and interpret it. Try to interpret it on your own. Words good. Imong ROE, ROI, as to unsa gyud siya ka unsa ang ginamin niya. Mostly it focus on profitability. So that means nga kung the lower imong ratio, that means dili kay ka productive, wala kay na-achieve ang imong goal, and the higher your ratio is, that means nga mas productive ka. So try to really reflect it on your statements. Kay diha man gyud siya mag-base always. So that's it all for today. Thank you everyone and goodbye.